Most people don't lose money in the market because of bad stocks. They lose it because they can't stand still. They trade like a cat on a hot stove, jumping from one idea to another, chasing every headline, and calling it strategy. I call it what it is: financial suicide in slow motion. I've watched men blow fortunes not because they picked the wrong stock, but because they couldn't wait for the right one to move. They think action equals progress. It doesn't. In this game, action is often the enemy. The tape rewards patience, not motion. The man who can sit tight when others fidget, he's the one who survives the storm. Every tick whispers temptation. The price moves a point, maybe two, and they can't resist. They rush in, out, and back in again, leaving their capital scattered like shrapnel. I've been that man, the restless operator, the one who mistakes activity for intelligence. The market cured me of that illusion the hard way. It took years to learn that the big money isn't made in the buying or the selling. It's made in the waiting. You can't force the market to pay you. You wait until it's ready, and when it is, you move once, not 100 times. Most never learn that truth. They die broke, still trying to outsmart a game that only rewards discipline. Everyone thinks the market runs on numbers. Wrong. It runs on emotions, yours and everyone else's. The ticker tape is just a mirror reflecting fear and greed. When the crowd panics, prices fall. When the crowd dreams, prices rise. That's the fundamental law. The market isn't a machine. It's a living organism that feeds on human impulses. You can't analyze it like an engineer breaking down a motor. You have to read it like a psychologist watching a patient unravel under pressure. Every uptick and downtick carries a human story. Behind every order is a pulse, a fear, a hope. Most traders don't see it because they're too busy watching the numbers flash on the screen. They think precision replaces perception. But precision is useless if you don't understand the mood driving those numbers. The market doesn't move because of what's on the balance sheet. It moves because of how people feel about what's on the balance sheet. In every bull market, optimism turns into intoxication. Prices rise, and the crowd starts believing it's all due to skill and intelligence. They forget the same optimism will one day turn into panic. When that day comes, they'll sell not because of logic, but because they can't bear the pain of watching losses mount. I've seen it too many times. The same faces, the same mistakes. Only the ticker symbols change. Human nature doesn't evolve. It merely replays itself with new costumes. The wise trader doesn't fight the crowd, nor does he follow it blindly. He observes it. He watches the market like a doctor watching a heartbeat, not reacting to every pulse, but waiting to see the rhythm underneath. He knows when fear grips the tape, bargains appear. When greed floods it, danger hides behind every rally. The crowd will always act on emotion, and that's what gives the thoughtful operator his edge. I remember watching traders in the bucket shops when I was young. You could feel the air thicken when prices started to slip. Men who had been laughing a minute ago suddenly turned pale. Some would slam their fists on the counter. Others would light cigarettes with shaking hands. Nobody was thinking. They were reacting. The tape didn't change because of the stock's value. It changed because of their emotions spilling into the market. That was my first real lesson. The market doesn't just reflect value, it reflects behavior. Every boom and bust since then has been the same story told in different words. The market rises not because the world improves, but because people believe. It's improving, then it falls when that belief cracks. Analysts dress it up with explanations, but the truth is simpler. Prices follow the crowd's psychology, not its arithmetic. You can draw every line, read every chart, and still lose if you don't grasp what the crowd is feeling. A man once told me he had a system that could predict every market move. I told him the only system that works is knowing when people are afraid and when they're overconfident. He didn't like that answer. He wanted something mechanical, something clean. But markets aren't clean, they're messy, emotional, and alive. That's why the same patterns repeat decade after decade. The players change, but the game never does. If you learn to read that emotional rhythm, you don't need to know what's coming next. You only need to recognize what's happening now. When everyone's euphoric, you prepare for the fall. When everyone's terrified, you start watching for opportunity. That's the paradox most never understand. The crowd is right during the trend, but always wrong at the turning point. The mirror never lies, but it always flatters before it cracks. The market's greatest trick is making people believe it's rational. It isn't, it's human, which makes it irrational, unpredictable, and yet completely consistent in its madness. Once you accept that, you stop trying to control it. You stop demanding it make sense. You start watching the reflection instead of the mechanism. And in that reflection, you'll see the truth of the market and of yourself. Because every trade you make, every hesitation, every rush of greed or fear. It's all part of that same mirror staring right back at you. Every losing trader I've met had one thing in common. Excuses. The Fed caused it. The market makers trapped me. The news was unexpected. Hogwash. The tape told them everything they needed to know. The price is truth. Your opinion isn't. I learned long ago that when my judgment disagrees with the market, I throw out my judgment, not my money. The tape doesn't argue, it doesn't flatter, and it doesn't care about what you think should happen. It simply tells you what is happening. Most traders can't handle that kind of honesty. They'd rather defend their ego than protect their capital. A man can stare at a chart and still refuse to see what's right in front of him. His stock is breaking down, the volume is heavy, and yet he tells himself it's only a pullback. He talks himself into losses, one rationalization at a time. I've done it myself, more than once. The market humbles you that way. Every loss is a mirror showing you who you really are when you're wrong. Most men look away. The successful ones look closer. The tape is an unfeeling judge. It doesn't care about your logic, your research, or your predictions. It only reflects the balance between demand and supply, fear and greed playing tug of war in real time. The problem is, traders don't want truth. They want validation. They want the market to prove them right. So they hold, hoping the tape will turn in their favor. It rarely does. The tape doesn't owe you a recovery. It doesn't owe you fairness. It only shows you where the pressure lies. I used to believe I could outthink the market. I'd build elaborate theories, connect every headline to a coming move, and then watch as the tape did the exact opposite. At first I blamed manipulation, bad timing, even bad luck. Eventually I realized it wasn't the market's fault, it was mine. The tape had already shown me the truth. I just didn't want to see it. That's the disease of traders. Selective blindness. They only read the parts of the tape that agree with them and ignore the rest. There's an old saying that the tape never lies. That's true, but it's only half the lesson. The other half is that traders lie to themselves. They lie about being patient, about cutting losses, about sticking to plans. They tell themselves they'll sell if it drops just a little more, but when it does, they freeze. They promise discipline, but the first wave of fear or greed washes it away. I've heard men swear they'd never chase a stock, only to buy it at the top because they couldn't stand missing out. The tape didn't deceive them. Their own weakness did. When you stop lying to yourself, trading becomes simpler, though never easier. You start accepting that the market is always right, even when it hurts. You learn that being wrong isn't fatal. Staying wrong is every loss becomes a message from the tape, telling you something about your timing, your patience, or your arrogance. Ignore that message, and you'll pay for it twice. Once in money, and once in lessons unlearned. I've known traders who treated the tape like a conversation. They'd argue with it, justify themselves, talk about what should have happened. The market doesn't hear those words. It speaks in prices, not opinions. When the tape breaks your theory, you adjust, not because you've lost faith in yourself, but because you respect the market's verdict. A man who can't admit he's wrong doesn't belong in this game. There's a peculiar peace that comes when you finally stop fighting the tape. You stop forcing trades. You stop chasing every move. You start reading, not reacting. You see the market for what it is. A pure reflection of truth, stripped of ego. It's almost beautiful in a brutal way. Every tick is an X-ray of crowd psychology. Every trend a map of mass delusion, if you can read it honestly. Without the interference of your own desires, it will tell you everything you need to know. That's the paradox of trading. The market never lies, but the trader does, and he lies most convincingly to himself. The tape's truth is always there, waiting, indifferent, unchanging. Some learn to listen, most never do. The few who do survive not because they're smarter, but because they've learned to silence the only liar that ever mattered. The ones staring back at them in the mirror. Markets are full of bright fools, people who can calculate Fibonacci retracements but can't control their impulses. Intelligence is cheap, self-control is priceless. The market rewards patience, punishes ego, and bankrupts those who think they're smarter than everyone else. You don't need to predict the next move. You need to survive the current one. Capital preservation is step one. Everything else comes later. I've met men who could recite every statistic, every ratio, every theory the textbooks ever printed. They knew more than anyone else in the room, except how to stay still when the tape turned against them. They'd enter a trade with perfect logic, watch it sour, and then double down because their pride couldn't stand being wrong. The market doesn't care about their intelligence. It cares about their discipline. When you lose discipline, the market takes everything you have, and it doesn't give it back. There's a rhythm to trading, a kind of silent tempo that separates the professional from the amateur. The crowd wants to dance on every beat, but the professional knows when to wait for the next bar. I learned that through pain, through watching profits evaporate because I couldn't keep my hands off the order ticket. The hardest lesson in this game isn't how to find winners. It's how to do nothing when there's nothing to do. Waiting feels unbearable to most men. They think inactivity is weakness. In truth, it's the only real strength there is. Every great operator I ever met had one thing in common. They knew how to sit tight. They understood that markets move in waves and that impatience is the undertow that drowns traders. Genius convinces a man he can outthink the tide. Discipline teaches him to wait until it turns. The difference between the two decides who makes a fortune and who disappears. You can't fight the market with intellect. It's a battle of endurance, not brilliance. Most traders are too eager to prove they're right. They treat every trade like a test of intelligence instead of a test of character. The moment they're wrong, their ego jumps in, whispering lies. It'll come back. It's just a dip. You can't sell now. That voice has ruined more accounts than any bear market ever could. Discipline isn't about suppressing emotion. It's about not acting on it. The market will tempt you to break your rules, to grab quick profits, to chase missed moves. The disciplined trader watches temptation pass by, knowing that every missed opportunity is cheaper than every bad decision. There was a time I thought I could trade my way through anything, that my knowledge was enough. I'd study charts until dawn, track every tick and still lose because I couldn't control myself. I'd sell too soon, buy too early, and justify every mistake with logic. Then one day I realized the truth. The market doesn't test your intellect. It tests your ability to obey your own rules. From that day forward, my charts mattered less than my habits. I stopped trying to predict and started trying to endure. The disciplined trader doesn't need to be the smartest man in the room. He needs to be the one who can follow his plan when everyone else loses their head. He doesn't panic when the tape runs red, and he doesn't get drunk on euphoria when it runs green. He takes small losses, lets his winners breathe, and protects his capital like it's oxygen. Because in this game, it is, without capital, there is no comeback. Discipline keeps you alive long enough to catch the right wave. Genius burns out before the tide even turns. Every time I've broken my own rules, the market punished me. Not immediately. It's smarter than that. It lures you in with one or two lucky breaks, makes you believe you were untouchable, and then wipes you out when you least expect it. Discipline isn't glamorous, but it's the only defense you've got against the market's tricks. It's the armor that keeps your emotions from becoming your executioner. Most people come to the market chasing excitement. They leave when they realize it's really a game of boredom. The winners are those who master that boredom. They don't crave constant action. They crave survival. They know every great move begins with waiting, and every ruin begins with overconfidence. The market will always tempt you to do something. Discipline is the art of refusing until the odds are right. That's not genius, that's mastery. And mastery is the only kind of intelligence the market respects. Leverage is like whiskey. 1 drink sharpens the nerves, 3 will have you seeing ghosts. Every ruined trader eventually meets his own margin call. Debt magnifies gains but multiplies stupidity. Real wealth isn't about what you can borrow, it's about what you can keep. The man who owns his time, his capital, and his choices, he's already rich. I've seen more men destroyed by credit than by crashes. They think of leverage as a shortcut, a way to accelerate success. What it really does is speed up ruin. When you trade on borrowed money, you stop being your own master. The broker owns your sleep, your pulse, your decisions. Every tick becomes a threat, every fluctuation a verdict. There's no freedom in that, only servitude with better lighting. The illusion of control disappears the moment the market moves against you, and it always does, sooner or later. Debt is the devil in disguise because it doesn't destroy you right away. It seduces first. It whispers promises of greater profits, faster gains, bigger positions. It feeds your ego, makes you believe you're operating on another level. For a while, it even works. Your equity grows, your confidence blooms, and you start thinking you've cracked the code. Then the market turns a degree colder, a little sharper, and suddenly the leverage that made you feel powerful becomes a knife against your throat. That's when most traders learn the truth too late. The borrowed dollar is not a partner, it's a predator. I learned that lesson early and painfully. I once took a position larger than I should have, not because the setup demanded it, but because greed did. Everything looked perfect until it didn't. A small move against me became a spiral. I watched my account shrink faster than I could think. What hurt most wasn't the loss, It was the realization that I had handed control of my fate to a margin clerk. That's the humiliation leverage brings. You don't go broke because you were wrong, you go broke because you ran out of time to be right. A trader without debt can afford to wait. A leveraged trader can't. The market knows that. It smells fear, it senses desperation, and it always goes for the weakest hand. The man who owes money has no patience. He needs results now, this hour, this minute. That urgency blinds him, makes him chase, makes him break his own rules. The debt doesn't just empty his account. It erodes his discipline. He stops trading the market and starts trading his margin call. There's a strange calm that comes when you're trading only with what's yours. You stop needing every trade to work. You can take losses with grace because they don't threaten your survival. You can wait for the right moment without the ticking clock of interest whispering in your ear. Freedom in the market isn't about making millions. It's about being able to say no. No to bad setups, no to overtrading, no to the seductive poison of borrowed power. The market loves to humble the overleveraged. It lets them win just enough to get comfortable, then takes everything back with interest. I've watched seasoned men turn reckless because leverage made them feel invincible. They forgot that the same force that lifts you higher also ensures a harder fall. It's not intelligence that keeps you safe in this game. It's restraint, knowing when enough is enough, knowing that survival is better than spectacle. Debt changes the way a man thinks. It breeds anxiety in quiet hours and arrogance in good ones. It makes him see profits where there are only risks. It turns him from a trader into a gambler with a ticking clock. That's why real wealth isn't about how much you can control. It's about how much you can endure without panic. The man who trades without leverage trades with peace. The one who leans on borrowed money trades with ghosts. And ghosts don't sleep. I've never met a trader who regretted being too cautious, but I've met plenty who wish they'd taken less risk when the times were good. They all tell the same story in different words. That leverage gave them confidence and confidence gave them ruin. The path to wealth is narrow and unglamorous. It's paved with small positions, quiet patience, and the refusal to owe anyone anything. Because once you owe, you're no longer playing your own game. You're playing the market's, and the market always collects its due. Forget trying to buy bottoms or sell tops. Only liars and obituary writers get those right. Ride the middle, where the money is. A confirmed trend with volume is worth 10 expert opinions. The crowd creates the move, and the move creates the profit. When the trend turns, don't argue. Don't hope, just exit. Hope is not a hedge. Every beginner wants to be the hero who catches the turning point. They dream of buying at the exact bottom, selling at the perfect peak, and bragging about it for the rest of their lives. The truth is, those trades belong to fiction. Real profits are made in the middle, in the clean, unglamorous heart of the move. That's where patience replaces luck, and observation replaces prediction. The trend doesn't reward the first man in or the last man out. It rewards the one who can recognize it early and stay aboard without losing his nerve. I used to think I could outsmart the market by catching reversals. I'd spend nights studying every tick, trying to anticipate where the crowd would turn. Sometimes I'd get it right, and that was the worst thing that could happen. It made me believe I had a gift. I didn't. I had luck. The next time, I'd double my bet, and the market would remind me how expensive ego can be. After enough pain, I stopped trying to call tops and bottoms. I learned to wait for confirmation, for price and volume to tell me the story instead of guessing the ending myself. The trend is the only true friend a trader has. Everything else, news, opinions, analysis, is just noise trying to distract you from it. The tape shows you the path if you're willing to watch without bias. When prices rise steadily on strong volume, that's not random. It's demand overwhelming supply. When they fall on heavy selling, it's the reverse. There's no mystery to it. The trick is not in knowing why the trend exists. It's in having the discipline to follow it while it lasts. Most traders lose not because they can't spot a trend, but because they can't stay with one. They sell too early because they're afraid of losing unrealized gains, or they hold too long because they can't admit the turn has come. The market plays both sides of human nature. Fear cuts profits short, greed stretches losses long. Following a trend isn't about analysis. It's about emotional control. You make your plan, you ride it, and when the market tells you it's over, you obey. Anything else is self-deception. I remember the first real bull run I ever caught. It started quietly, no fanfare, no headlines, just steady accumulation. I bought in small, added as it confirmed, and for once, I didn't try to outthink the tape, I just followed it. The crowd joined later, pushing prices higher, and all I had to do was sit still. It was the easiest money I ever made and the hardest discipline I ever practiced. The urge to take profits whispered every day. The urge to predict the end shouted every week, but I stayed until the tape told me otherwise. That trade taught me more about markets than any loss ever could. A trend is a living thing. It breathes, it stretches, it hesitates, and eventually dies. The market always gives signs before the end. A change in volume, a flattening in price, a shift in tone, but the average trader ignores the warnings because hope clouds his judgment. He tells himself it's just a pause, a correction, a chance to buy more. Then the reversal hits, and by the time he admits it, his profits have vanished. That's why hope is the most dangerous position of all. It keeps a man in a trade long after the market has left him behind. The secret isn't to predict when a trend will start or end. The secret is to recognize, respect it, and follow it with humility. You'll never catch the first or last 10%. That's the toll the market charges for certainty. Pay it gladly. Trade the middle, where the risk is clear and the direction confirmed. Let others chase perfection while you collect consistency, because the man who follows the trend may not look clever, but he sleeps at night. And over a lifetime, that's what builds fortunes. The market is a battlefield of opinions, but the trend is the only flag worth marching under. Everything else is noise. Follow it with patience, abandon it when it breaks, and never forget. The market doesn't reward bravery or cleverness. It rewards obedience. When the trend is your friend, stay loyal. When it leaves, walk away without regret. There will always be another one waiting to be found by the trader who knows that profit lives not in prediction, but in patience. Most people can't make money in the market because they can't think alone. They need validation, applause, or at least a chat room to share their misery. The best trades are lonely, entered quietly, exited calmly. You won't find conviction on CNBC. You find it in silence, in your own reasoning. When you stop needing to be right and start needing to be disciplined. The crowd hates solitude because solitude exposes uncertainty. When you're alone, there's no one to echo your beliefs, no one to comfort you when the tape turns red. You face the truth unfiltered, that every trade is your responsibility. Most people can't stomach that. They'd rather share in collective delusion than bear the weight of solitary judgment. That's why the crowd loses. They're not traders, they're participants in a public therapy session, trying to turn emotion into strategy. The market rewards the man who can detach, not because he's cold or heartless, but because he understands that independence is the only protection against the madness of others. When you trade surrounded by opinions, you start mistaking noise for knowledge. You begin adjusting your convictions to fit consensus. Soon enough, your trades stop belonging to you. They belong to the herd, and the herd always moves last. I used to spend hours listening to other traders. Everyone had a reason, a rumor, or a theory. The more I listened, the worse my results became. Not because they were wrong, but because their conviction diluted my own. I realized that the moment you start seeking agreement, you've already lost your edge. The market isn't a democracy. It doesn't care how many people agree with you. It only cares whether you act before or after the crowd. The best trades always feel uncomfortable, sometimes even foolish, because the crowd hasn't caught on yet. By the time they do, the easy money is gone. There's a peculiar kind of quiet that comes with real conviction. It doesn't shout, it doesn't seek approval, and it doesn't rush, it waits. The best trades I ever made were the ones I couldn't explain to anyone else. Not because they were secrets, but because they were rooted in my own logic, my own reading of the tape. I didn't need applause to confirm them. The market's reaction was proof enough. If I was right, it would show in the price. If I was wrong, the tape would tell me. Either way, I didn't need to ask permission. Solitude in trading isn't just physical, it's mental. You can sit in a crowded room and still think alone. It's a discipline, a habit of questioning everything you hear and filtering it through your own reasoning before it reaches your wallet. The market punishes imitation because imitation is always late. The man who follows another's conviction is already trading yesterday's idea. To make money, you must learn to trust your own process. And to do that, you must be comfortable in silence. The world worships noise. It fills every screen, every feed, every minute with opinions dressed as facts. Traders chase commentary like addicts chasing a fix. They think more information means more control. The opposite is true. The more noise you consume, the less clearly you see. You begin to overthink, overtrade, overreact. The silence most people fear is where clarity lives. That's where you find the discipline to act only when it matters. There's a strange irony in the market. The lonelier you are, the closer you get to truth. You stop seeing things through the crowd's lens and start seeing them as they are. You stop asking what others think and start asking what the tape says. You learn that conviction isn't about confidence, it's about consistency. The quiet trader doesn't need to shout his wins or justify his losses. He knows the market keeps score in its own way, and it doesn't grade on popularity. Over time, solitude becomes less of a burden and more of a refuge. You stop fearing it. You start craving it. It becomes your workspace, your shield, your advantage. You no longer chase consensus, because you understand that by the time everyone agrees with you, the opportunity is already passed. The market will always tempt you to join the noise, to believe you're missing something vital by staying quiet. But the truth is the opposite. You miss the truth when you stop listening to yourself. I've watched traders talk their way out of fortunes because they couldn't handle being alone in a position. They'd look for reassurance until they found someone to contradict them, and then they'd act on that contradiction. The crowd thrives on confusion. The operator thrives on clarity. That clarity only comes in silence. When the opinions fade and the tape does the talking, the man who learns to trade in solitude isn't lonely. He's free from noise, free from ego, and free from the need to be right. He doesn't need company, he needs conviction. And conviction, like profit, is something you earn alone. There's no secret formula, only secret discipline. The Livermore Code isn't about prediction, it's about control. Control of risk, of emotion, of ego. The stock market is the most honest teacher in existence. It gives you exactly what you deserve. If you chase shortcuts, it'll humble you. If you respect your plan, your stops, and your sanity, it'll reward you. I've seen clever men try to outwit the market with tricks and systems, each one promising certainty. They all end up the same, drained of capital and confidence. The market doesn't fall for deception, it exposes it. You can't cheat probability, and you can't fake patience. Those who rely on gimmicks win small and lose big because tricks don't teach character. They only feed ego, and ego is fatal in this business. Character is what separates the professional from the gambler. It's the quiet force that holds a man steady when the tape turns wild. It keeps him from doubling down in desperation or taking victory laps after a lucky streak. It's not about morality, it's about survival. A man without character trades like a man without brakes, fast, reckless, and destined to crash. Every mistake I've ever made came not from ignorance, but from ignoring my own rules. The market doesn't punish ignorance as harshly as it punishes arrogance. The rules that work are simple, but simplicity offends the ambitious. They'd rather chase complexity than consistency. They don't want to hear that. Wealth is built one disciplined decision at a time. They want fireworks. The market gives them explosions, just not the kind they expect. The truth is that your edge isn't in finding some new indicator, it's in doing what others can't. Staying rational when they panic, patient when they rush, humble when they boast. The market is fair because it's indifferent. It doesn't care who you are, where you came from, or how smart you think you are. It measures everyone by the same scale, discipline versus emotion. If you act with character, you last. If you act with impulse, you vanish. Wealth isn't built in a day, but it can be destroyed in one bad decision, one moment of weakness, one breach of your own code.